Hey guys, and welcome to the weekly Stock Talk. Today's April 22nd at 6:10 p.m. Eastern Time. Now, before we get started today, I made two major announcements earlier today. One is I'm releasing content videos onto YouTube, and the content videos will focus on best trading strategies and practices that I've learned and seen. And then it will also expand on some of the things that I see during the weekly Stock Talks, which is what we're doing right now. Another major announcement is I'm also developing my own trading course. So that is currently under development, and this is where you guys can interact with me as well as learn about all the strategies step by step. So it'll be very easy to understand for everyone. So let's start today, of course, with SPY on the 180-day chart. So this is kind of interesting because last week we actually left off on Thursday talking about two potential scenarios. And if you guys remember, one potential scenario I illustrated out was a potential retest, right, of the resistance. And the retest of the resistance would mimic the March 13th date where we had a double peak. And here we would have a double peak at the resistance, and the resistance is identified to be at around 271.36 on the SPY. Now, the second scenario I illustrated out, the more probable scenario that I illustrated, was just to follow this U-turn. I mean, you don't have to be a genius to look at that, right? Because, oh, it made a U-turn. Okay, where do you think the markets will go? Well, chances are it'll keep following the pattern. So this is what happened on Friday where it kept dropping, right? So recall last time I did a little Fibonacci to see where we could potentially drop to. So if we just do this again, just to illustrate to you guys that the potential drop point where I see is around 264 to 265. Are we there yet? We're not there yet because SPY closed at 266.61. Okay, so you guys might be wondering, well, Kevin, look at the futures right now. The futures are positive. We're going back up. It's the U-turn. This is what everyone's been cheering for. So remember, futures can change overnight. That's why they're called futures, right? Because when markets open, futures might be starting in negative. Markets might pull the futures to the negative. So really, it doesn't matter too much what happens right now. Yes, we are in the positive. Dow Jones futures are at positive 73. But it's normal, right? Because take a look at this. Whenever we see a huge decline, we want it to see retrace back to the light blue line, which is the 20 EMA. Why do we want to see that? Because generally, stocks or ETFs don't fall in a straight line. They like to hit the 20 EMA, kind of test it out before another big drop occurs. So what am I seeing in the potential future, right? Because we've taken this scenario off the chart because we're not doing a double peak, at least not yet. So what I'm looking at is, again, we can see a retest. So let's get that line out of 265 to around the 265 area. So it'll keep dropping to around this area tomorrow. And then we would look for a bounce or a reversal back then. That would be what I call a healthy correction, right? This is not, doesn't mean that it has to go all the way down to test this major support. So that's the first thing. That's the most probable scenario that I currently see. Now, it doesn't have to follow that because it's all about probabilities, right, guys? Nothing is 100%. So the other scenario that I see is if it does drop down here and we don't see a reversal, now that is what I call a more dangerous area because then we have the potential to retest this area down here, which is around 258. And by that point, if we do fall and there's no reversal, then you guys, everyone can probably start shorting the stocks or that follow the market. Now, the other scenario, which is less probable at this point, but could happen, is that we do see a reversal tomorrow back up. Now, you might be asking, well, why is that? Because didn't you just tell me that it's going to go down? Well, yeah, that's why it's called the less likely scenario, right? So if it does go up tomorrow, and this is just pointing out a scenario, if it does do that, that's a really bullish sign. Why is that? It's because usually when you have an impulse, you want to correct it to around the 50% area of where the impulse or the rush of buyers came in. You don't want it to fall all the way down here because that just kind of follows the pattern. We're not trying to reverse back that. But if we catch it down here before we get down to the halfway point and it starts reversing back up, that is a very bullish sign. That means the market doesn't want to go any further downwards, and then we could probably, most likely, get past this resistance, right? This resistance is around 271.30, like I said earlier, and we would go ahead and test around this resistance around 272 to 273. Now, why is this resistance the most important resistance? Well, if we zoom out on the 180-day chart, we do see that SPY has making lower highs in the past few months. And people were like, oh, we might be in a bearish market now. And in fact, during this time period, we were in fact in a bearish market, and we're still in a more bearish trend. Until we can break this resistance up here, we will still be in a bearish trend. All right. So if we can break this and hold above this, then everyone would start buying in, whether it's the institutional buyers or us, the retail buyers, the buyers will all come in. So let's talk about volatility, which is also pretty interesting. So I look at volatility, you guys might look at through the VIX index, but I look at it through TVIX. Pretty much just follows the VIX. A TVIX is just an ETF that you guys can invest in if you feel like volatility will go up. So here's TVIX on the 180-day chart. Now, what's interesting about this is we've identified TVIX resistance around $6.76, right? And this was done last week. Now take a look at this. I expect it to kind of like go back and forth between the 20 EMA and the support. Well, we actually had a steady uptrend to the 20 EMA, okay? Does that mean that we should buy into volatility right now? Absolutely not. Remember, we're at the 20 EMA right now, and it might very well get rejected. And volatility falls easier than it goes up, right? Because markets tend to be more bullish over time. So you guys can see this right here. And yesterday or Friday, we saw the first 4 hours of the big green candle, followed by a red candle that didn't quite match the green candle, but we ended under the 20 EMA. So that is just something to note. Volatility can spike up and down, and tomorrow I expect much of the same, right? We're at the 20 EMA, and we might see this downward trend tomorrow getting rejected by the 20 EMA, or we might see some fluctuations. That's just the normal market trend. But for it to go spiking up, I mean, that could happen, but I don't see it spiking up all the way to like the 200 SMA, right? That's just a little less likely, Now let's take a look at JP Morgan, which is a bank that I track. Now here's something really interesting, guys. While SPY was going down, right, on Friday, look at this candle. All right, what is this kind of candle? Well, JP Morgan, the banks, were trying to pull up. They were trying really hard. And why was it really interesting? It was because the day before, let's look at Thursday, while the markets were going down, and we pointed this out in the Thursday video, JP Morgan, the bank stock, was going up, okay? So generally speaking, banks in the markets don't move in the opposite direction. When they do move in the opposite direction, it's very strange because one of them will prevail. So you can see that banks tried to push up, but the markets kept pounding and pounding and pounding them down. And in the end, JP Morgan did come down, only kind of to recover and close down here, which I just thought it was really interesting because I still feel like markets generally right now are trying to push upwards. And they're really trying, and they know that on SPY, everyone knows that a small, retracement is due because we pulled so far. We had a streak of a week of bullish trends when the markets barely even fell, right? This is a very bullish trend. We need to start breathing again, and this is where we start breathing. But generally speaking, I feel like the markets are still leaning towards the more bullish side as of now, especially with all these earnings coming up, guys. And these companies are all, like, most of them are beating earnings, some of them by a significant margin. So this, along with other factors, will, in my opinion, try to push the market up as we go forward. Now, of course, there's news that might come in. Oh, war with Syria or some other news. I mean, that's unpredictable, right? If that comes in, then that throws the technical analysis in a different track, and that'll be, well, we'll cover that in another day, right? If or when that happens. But for now, we just look at the current trend. Let's take a look at 4/CL, and on weekdays and weekends, we do look at ETFs. So 4/CL tracks crude oil futures. Here's crude oil on 180-day chart. it was making higher highs and higher low. And we identified that crude oil pushed over this major 180-day resistance, right? But it tried to come down and retest. And let's take a look at what's happening. So far, it is holding the support. The resistance has become a new support. And now, if you guys don't believe me, sometimes, you might not rely on this line as the new support. So you guys can easily, instead of drawing this, you can add a line that goes down here. All right, guys, so down here. Right there. That's the support. Why is that the support? Well, you guys can see that this was the previous high. Right, guys? This was the 180-day high up here. So this is probably the new support. And you guys can see that we bounce off of the support. What does that say for crude oil in terms of its futures? Crude oil so far is still bullish. Now, crude oil follows the ticker GUSH, G-U-S-H. So let's take a look at that on the 180 chart. No doubt we saw a crude oil push up massively during the last week, right? It broke the resistance on the futures. It broke the resistance on the daily charts. So we identified on the 3-year chart for GUSH, because we pushed so far high up, we needed to take a look at the 3-year chart. We were wondering why GUSH couldn't pull over $32, even when crude oil was still pushing up, like last week. Not the end of last week, but like a couple days before. Why couldn't it get above $32? It did, but it came back down. It's because we were making this lower high, and that this resistance area is at $32. And now you're like, ah, okay, I see. Now let's take a look at the 180-day chart. What else can we see? Well, we identified at the breakdown candle, all right? These are the breakdown candles when crude oil went from bullish to bearish, that this would be a major resistance area. Why is it? It's because it's the breakdown area, right? So this could act as a resistance, and we can see that because these two lines are converging with each other, that makes it an even stronger resistance, which is why you see crude oil having a hard time, at least for now. But nothing is out of the equation. Crude oil, because it's bullish on the futures and it's keeping the support, can break this resistance. All right, so if I do see it break this resistance, and the resistance is currently situated at $33.39, if I can see it keep above there, that is a potential buy for crude oil at that point, and I will be looking into GUSH. Taking a look at DRIP, which is the inverse crude oil. So if /CL is going up, DRIP is going down. So we identified that every time DRIP has gone below its support, right, it has kept going down. So let's take a look at that on the 1-year chart once again, which we talked about last time, right? Here, DRIP had a major support. It broke it, and look, it kept going down before it started consolidating for a while. Here, this was a major support on the 180-day chart. It broke down, and it kept going down before it recovered, okay? Down here, we did a double bottom over here, and then it broke the support, and it kept going down, and you guys can look at that, right? It kept going down before it started recovering again. What happened now? We broke a major support, and now we're heading down. So you guys might be wondering, oh my gosh, guys, it's time to go into DRIP. Look at this. We're doing a U-turn, right? This is the U-turn we've been all waiting for. No. Not necessarily, right? For many reasons. First reason was the crude oil futures that I just pointed out to you earlier, and I said that GUSH might break the resistance. You know, it might happen. Another thing is, every time it goes down further. Take a look at this, right? When GUSH went down, yes, there was a green candle. Look, there's another green candle right here. You guys see that? Let me just zoom in. Right? Look, there's a green. So at this point, this is pretty much where we're at right now. You guys might be asking, oh, this is the U-turn. Look at that. But then it kept going down, right? Take a look at here. It kept going down, but then there's a green candle, right? This green candle almost pushed all the way up to this red candle before it kind of got squished down. So at that point, you would not say that this is a reversal yet. So you guys just got to be really careful at what you're looking at. So down here, this is not a reversal. We're not even hitting the 20 EMA yet, right? So the light blue line is the 20 EMA line. We're not even there yet. So we could see it kind of push a little bit higher before it collapses again. And that is the more probable scenario that I see for drip. All right, so am I going to go into drip? Definitely not. So if you guys are in drip, just be cautious. I'm not saying, you know, like get out immediately, right? But just if you're trying to play this retracement back, be cautious, because that you got to time your entry and exits and try not to let your emotions affect you, especially when these fluctuations happen every single day, several percentages. Let's talk about forward/NG, which tracks natural gas. So here's natural gas, right? Let's take a look at 180-day chart. Here's natural gas, and forward/NG follows UGAZ. So we actually identified a support last time for natural gas around 2.665, and we said that this would be a potential buy. Now, at that point, I actually said that don't buy UGAZ yet because I felt like the risk to reward ratio was not worth it. Why was that? It's because, look, it pulled down, and it can easily pull down before it goes back up. So I was asking you, are you guys willing to risk 4 to 5% before it goes back up? Well, obviously this scenario didn't play out, but it actually popped straight up. And actually natural gas on that day, so follows UGAZ, went up 6.46%. So if you guys were in UGAZ, great job for getting into UGAZ. So you might be wondering, like, okay, so do I buy in now? Well, look, we're at the peak, right? This is a very strong resistance up here. So you guys might be asking, like, well, Kevin, sorry, I'm trying to draw this line perfect, and it has to be perfect. There we go. Okay. So you guys might be asking, well, you have this resistance line. Can't natural gas get to 2.806? Well, remember, guys, that the near-term trends are more important than the long-term trends, right? That will play more of an effect. So looking at this, this is the near-term trend. This is at 2.754. This is where we're at. And we can see natural gas maybe kind of teeter-tottering back here. Same thing right here, right? Kind of teeter-totters back and forth at the resistance before it collapses again. That's a very probable scenario. So am I going to go into UGAZ right now? Nope. Am I going to go to DGAZ right now? Not right now until I can see a decline. You guys can see that when it declines in DGAZ, you guys might be like, oh, this is DGAZ time, right? And then it tried to do a double peak before it came back down. So look right here. Peak, peak, came down. So here we want to see a peak, come down, maybe another peak, and then buy into DGAZ. So I will be looking for that trend in the next week, and I think DGAZ would be a good play if we can see that kind of scenario. Does it have to do a double peak? No, it does not. It can easily just come back down. That's the more probable scenario for me. So let's take a look at DGAZ really quick just to see where it's at. There's DGAZ right now, right? So DGAZ, you guys can see that once again, DGAZ has fallen back to its support around $27.58. If it goes a little lower, it'll be around $27.17. I remember I was discussing this scenario with you guys last time. Remember, I actually bought into DGAZ, and then it fell all the way down here, and then I stop-lossed out before it went back up. So you guys might be asking, like, well, your trading strategy isn't that great. Why did you stop-loss out? Look, it went straight back up. So it's all about discipline, right? You see a trend, and if it breaks that trend, for example, if it broke this trend, right, that's really dangerous because it could easily go down. The probability of it going down and you losing 5% is significantly higher than for you to gain that 6 or 8% that DGAZ went up on that day, on the next day. So that's why I stop-lossed out. I only lost like what, 1.5%. It's almost nothing because I controlled my losses, and my profits are still greater than my losses, even though I stopped out. Okay. So let's take a look at the next thing, which is /GC, which tracks gold futures. Now here is something very interesting. I said that gold was looking extremely bullish last time, and it was making this higher low. When it collapsed below this support, this is the time, in around 1342. This is the time when you can bought into which ticker, guys? Ticker JDST, right? Which is inverse gold, kind of tracks the US dollar. So JDST is a potential buy right now. So taking a look at this, well, it broke this trend, and now where is it heading? Well, I have a support, right? We have a support around here. This is the support. So gold support is around 1326, 1327, around that area. Now, one thing to keep in mind is taking a look at, yeah, that's still the support. So, you know, you guys can buy into JDST for now, but just be careful because like gold, if it starts bouncing at this area, that would be once again a potential buy for JNUG. So if you guys want to kind of scalp JDST, that's up to you. It's a little dangerous right now just because gold has fallen so much already. But I feel like it could still fall to around the 1327 area. It has the potential to fall. So let's take a look at JDST, which is what I'm kind of interested in. And taking a look at JDST, we do see this bounce up, right? We actually bounce over the 20 EMA. But one thing to be cautious is you can see that JDST has been declining, making lower lows and lower highs. So this is not something that I would be actively trading unless it was at the very bottom. And this would just be like a very quick day trade or a very quick trade before it's like an in and out in probably 1 day, 2 days max. Because you guys can imagine, look what happens. 1 day, 2 days, you don't sell it, next day, boom. You lost pretty much everything you gained in 1 day, right? Look at this, right? 1 day. Oh, you're not going to sell it? Look, it's going to decline the next day. You're still not going to sell it? Well, it keeps going down. Look at this. It bounces up. You're not going to sell it? Okay, we're going to keep going down. So that's why I don't really like JDST right now. And I'm waiting for that JNUG to hit that support area and do a U-turn. And then I would look into JNUG, which is a more interesting buy for me. So looking at JNUG, we do see it coming down. This trend no longer is applicable. So yeah, so this is we'll just have to see how this plays out, right? So let's take a look at a couple of stocks that you guys called out. So one of the viewers called out NAP, I think, or was it NAP? So I took a look at this. So NAP has a support right at $3.26. This is no doubt. But take a look at, I don't like these kind of stocks for much of the same reasons as many other people, is that we do see these spikes in volume, right? Look at this volume. Look how low this volume is. All of a sudden, some news came out dropping the stock all the way down, and now we have a spike. So this is not something that I like. Even though it's crossed over the 20 EMA, this massive surge, I feel like this is like a pump, and at some point we're gonna have a dump, and then if you're not, if you're not careful, then you're just going to lose it all. So I don't like these kind of stocks, even though it is showing an uptrend. And plus, we're so far extended over the 20 EMA that I would be uncomfortable. And you guys can look at this, right? Look at this massive green spike up here. This is not a stock that I would go into. All right, massive green spike. So yeah. All right. So the one stock that I'm in right now is Square. But thank you for calling that out. It was a very interesting pattern. I love all these callouts. Square. This is the one I'm in. So Square has an identified support at 45.81, and what was really interesting, the markets were going down, yet Square went up on Friday. That has to say something, right? Square is really bullish, and we talked about this bullish signal in the past. So we looked, I believe, on the 1 year chart for Square. So that is not the 1 year chart. Yeah, so here's Square on the 1 year chart. We talked about this last time. Whenever Square gaps up over the previous candle that over the 20 EMA line, the uptrend starts confirming. Gap up over the 20 EMA line, the uptrend starts confirming. Look what happened here. That day we gapped up over the 20 EMA line. That's could be the start of an uptrend. Plus we've had a pretty big correction by Square. Square, in my opinion, is still a pretty good buy. So anyways, I'm in Square on both of my accounts, on the Robinhood account and on this account. I just really like the pattern. I like their company. I like their leadership. So That's the pattern that I'm seeing. All right. I believe that's it, guys. If you guys like this video, well, if you hope you like it, then if you don't like it, I hope you like it in the future. And remember to check out the content video that I posted earlier today if you're interested, and then message me if you guys have any tickers that you want me to analyze on these videos. I'll be happy to do it for you. And yeah, and hopefully you guys wait for the course, and it'll be a really exciting time. I'll tell you more about that in the future. Thank you very much. Happy trading, and see you tomorrow, Monday. Later.